Good day everybody, welcome back to the channel where we present you with another weekly outlook. We're gonna take a look at the economic news drivers, we're gonna present you with a risk management profile on how to navigate the markets this upcoming week, and we're gonna dive into a little bit of charting itself to take a look which price action is the most suitable for high probability trades this upcoming week. I'm Ignas from Daily Pips Trading, and let's dive in. Starting with economic news calendar itself, where we're looking, sadly, at another Monday where we have no economic news drivers coming into the marketplace, telling us that we should avoid trading this upcoming Monday, which is 14th of October. Looking at the week itself, majority of the risk is going towards Tuesday and Friday trading for us, where Thursday is going to be a very volatile day, where 8:30 a.m. New York time, a lot of news are releasing, so expect a high or low of the week to form on Thursday itself. Take away the liquidity, whether it's going to be resting above or below the marketplace, and Friday itself possibly coming back into the range. So quite an easy week to navigate, but at the same time a little bit difficult because there's not going to be many impulsive swings on the time that you're expecting, because there's no news throughout the week itself. But it is the third week of the month where we love trading, because majority of the markets are already opened up, majority of the marketplaces already accumulated and manipulated. We're waiting for that distribution phase for the marketplace to deliver the final targets of the month, and it's gonna be a very interesting week because I already like what I see in the charts. So if you like what we're doing here already, leave a like to this video. Subscribe if you're not subscribed to the channel itself, and if you really want the real insights of what we're doing here day in, day out, week in, week out, link to the Discord community is down below in this description of this video. Risk profile is quite reasonable, avoid trading on Monday, so let's take a look at what kind of price action we see in the charts itself. As we do it every single week, we're starting with bonds. Bonds so far, just like we called for, have been able to deliver lower prices. We're expecting the marketplace to find support here. However, badly I like the word of support itself, but we're looking for this imbalance, for this fair value gap, which is bullish, to hold in the price. So everything that I see here up until the point that it gets close below this weekly imbalance itself at 119.24, very sharp, very precise level. Up until that point, I'm expecting the marketplace to bounce away from here, right? Just like we expected the marketplace to bounce away from here on the daily last week, we actually failed to deliver that, but we're watching this now, right? Not only we have a weekly imbalance holding the price right here, I'm gonna be watching this, and I'm gonna be expecting to see a bottom down here. Tuesday low of the week would be incredibly brilliant and incredibly beautiful for us, because we're watching this also order block, the last down close candle right before the marketplace started moving higher to kind of hold in the bonds in place. So I'm expecting the marketplace to find bottom down here, either in the imbalance level here on the daily chart or the order block itself. And you see how I'm noting not only the fair value gap itself, because the fair value gap itself is only out here. I'm noting the whole volume imbalance and the fair value gap level. A lot of keywords here together as a one big price gap that has to be filled, right? That has to be balanced before the marketplace starts running higher. First target, if the marketplace starts running higher, is right here for me. If we cross above it, like this, come back into it, this is the second level of my interest. Higher prices will follow afterwards. But at the same time, what we have to realize is the fact of a high, a low, a higher high, and then a lower low forming, right? What does it mean? All these down close candles is a bearish breaker block. And again, guys, I'm not saying it market ourselves. I'm not saying it so you would be more interested in what we do than you are right now. I'm saying it because I want you guys to realize how the marketplace actually works. This is a bearish breaker. Everything below it is gonna continuously deliver lower prices for us. If the marketplace comes back here, it's gonna be incredibly hard for the market to push through this level, right? So I'm gonna say it out loud. I think there's a high chance and a high probability that marketplace does this. So watch these two key levels on bonds. I think this is one of the longest analysis on bonds in a while that we've been given. Watch 123.1 and watch the midpoint of the breaker block itself, right? Ideally, we don't want to go above the last down close candle itself, right? That not only aligns with the fair value gap itself, that also aligns with the 50% level of the breaker block itself. How random is that? But to be fair with you, the marketplace is going to be interested in the whole, in all these down close candles, because it's going to be treating them as a one big down close candle itself. So watch the breaker block, watch for possible lower prices, but short term, this upcoming week, I'm actually expecting a bounce away from this. So we're bullish on points. How interesting, huh? Dollar index on paper is drawing us into this weekly imbalance at 103,494. That is gonna be my interest in. Not only that, we just broke through the daily imbalance that we've been calling for the marketplace to deliver. This was our target last week. We delivered, we got that, and now we're pushing away from it, we're pushing higher. So on paper, very simple analysis for me on dollar index. Everything above this imbalance is going to be bullish for me. Everything below it, I'm going to be looking for lower prices immediately, right? So watch this imbalance itself. The marketplace can do either of these two following ideas and come into this, accumulate, and push towards this buy side liquidity pool at 103,546. Very precise. If you're gonna be in lower time frames itself, take a look at 50% level of this imbalance. Everything above this 50% level of it is gonna be quite bullish for us. But the second scenario starts if the marketplace closes below this daily imbalance. Right? Closing below it means that it just got inverted, so we're gonna push lower prices quite immediately. And watch this swing low. This is not a random swing low. This is gonna be a break of market structure if we're gonna start closing below it with a big impulse, right? So watch that. I'm gonna be interested in that, but only if the daily fair value gap itself gets closed below it. Euro, this is what we've been looking for the last week. We wanted the marketplace to actually bounce away from this daily fair value gap level. Fortunately, we didn't get that. Unfortunately, we didn't. And unfortunately now, because of this fact, right, we're gonna be looking for pretty much the same setup as we have on dollar index. We're gonna be looking for a possible push to the downside once we come back into this fair value gap level towards sell side liquidity resting at 1.08814, and if it wants to run even lower, 1.07782 is gonna be my interest. Second idea for the marketplace, right? This is why I'm not rushing. This is why I avoid trading Mondays without news, because I want to see the marketplace accumulate to the initial move without me and then proceed towards the real draw in liquidity for the whole rest of the week with us. I don't want to participate in the first manipulation move. I don't want to be caught out. So we're gonna be waiting a little bit. We're gonna do some waiting this upcoming week. So if Monday or Tuesday trading closes above this imbalance, this is my draw on liquidity. I'm gonna be watching 1.10829 quite immediately. And I'm gonna be very interested in that, especially if this swing high gets broken with an impulse. What is an impulse? It is a fair value gap opening up. It is an imbalance. It's gonna allow the marketplace to come back into it and bounce upwards, push to the upside, which is gonna be very nice for us to participate in. Pound is looking a little bit different, and I'm saying it out loud. I'm very much annoyed that this weekly imbalance was not touched, was not pinged, was not traded into, and then the marketplace started bouncing away from it. If that would have happened, lower prices immediately. I'm immediately interested in 1.20373 to get the delivery. Now, two things that I'm watching, right? This is the weekly chart. On the weekly chart, I'm watching a few things. We have this bullish order block still holding in the price. We have to remain true to ourselves. We have to remain true to the price action that we're getting. Watching this weekly imbalance being inverted. And then I'm coming into the daily price action where I'm still watching this order block accumulated so much liquidity. Like we're getting so much liquidity accumulated right here. Yes, this is not a horizontal line. It is, I know it is, but I'm watching how the price is gonna continuously react towards this level this week. But analysis that we had previous week is kind of negated because yes, even though we're bouncing away from this order block, imbalance right here on the daily chart didn't hold in the price, allowed it to move low, right? So we're watching sell side liquidity down below. At the same time, I want to very much emphasize the point that we made twice already in this video. I want to see the marketplace run without us first. I'm gonna be interested only in participating in this when I really know what is going to happen. At this time, we can bounce away easily towards this daily survival gap to run lower, or we can go lower immediately to bounce back away from it and continue higher, right? I don't know what is going to happen exactly when the market opens up on Monday, which is tomorrow, right? So I'm gonna do some waiting. I'm gonna allow the marketplace to do its work first. And exactly the same that we had on dollar, exactly the same that we had on euro, I'm watching a possibility of first the marketplace pushing higher to go lower for the rest of the week, or the marketplace initially going lower to push higher throughout this upcoming week. One out of two, but I'm not gonna get caught off. I'm gonna allow the marketplace to do the manipulation move, manipulation stage, where we're gonna possibly get caught out if we don't know what we're doing without us, and we're only gonna participate when we really know what is going to happen. So watch what I just drawn out here. It's gonna be very interesting to see what happens, but this weekly imbalance not being touched is a little bit annoying, and I'm still interested in higher prices because of that. S&P 500 all-time highs again, and we've been booking all-time highs after all-time highs, which is incredible, which is amazing. And every single level, every single imbalance that we want the marketplace to work away from is being a given, which is wonderful, which is precise, which is what we want to see. Now, coming from the weekly chart, which is incredibly bullish, which is incredibly good for us, for the analysis that we're doing, for the trading that we love to do. On the daily chart for S&P 500, we have to note a few things. We have to note sell-side liquidity pool being accumulated here. This is gonna become very juicy at some point. We have to note daily imbalance down here, down below, and take a look at this. We finally have a bullish imbalance opening up. What I'm gonna be watching for the upcoming week, if dollar index starts going lower as we're expecting, I'm gonna be watching this as a possible push to the upside, right? If that is being broken down below, sell side is being delivered right again. So we're bullish up until the point when the daily close happens below 5806.75. Very easy marketplace to navigate from, to do the analysis from, and the only thing that we have to do is push a button when the time is right, when the price is right, at the time where we want it to be, right? So we're gonna be looking for higher prices. We're not looking for the top yet, up until the point that this daily imbalance gets broken to the down. We're watching NASDAQ. We're watching NASDAQ deliver brilliant prices away from the order block resting down below. Unfortunately though, the marketplace is not able to book all-time highs. We have S&P here at the top, so however much I don't like seeing this, we have a possibility of the marketplace drawing lower here on NASDAQ because of the S&P at the top. I'm gonna be watching how we go above this buy-side liquidity pool, and if we start drawing lower immediately, I'm gonna be watching lower prices here on 19,529. If we're not bouncing away from this, if it doesn't break the structure on 4-hour, 1-hour chart here, once we get through this high at 20,538, I'm gonna be watching finally all-time highs to be delivered on NASDAQ. Taking a look at 4 hours chart, even though we have this imbalance, which is bullish, which is supposedly pushing the marketplace to the upside, we have to realize that there's a lot of imbalances here. 1, 2, 3, right? So there is a possibility of the marketplace going lower away from this high, but This is my initial draw on liquidity, 20,538. I would love that to get delivered. And then if we start bouncing lower, watch this imbalance. If 4-hour chart closes below 20,300.75, very sharp level, very precise level. We're not working with zones, we're working with very precise levels, right? Watch how we react lower. This is gonna be it from us. This is gonna be it from me, Ignas at Daily Pips Trading. So I'm gonna be repeating myself, but avoid trading on Monday. Take a look at the charts again, slowly, with the time in mind, and take a look whether the marketplace is gonna start delivering higher or lower for the initial stage of the week. We're gonna be looking for other side of the marketplace to get delivered for Thursday trading, which is gonna be a very interesting weekly profile, very interesting week to navigate. And with that in mind, I'm gonna ask you, if you don't mind, leave a like to the video itself, subscribe to the channel if you're just coming here for the first time, and if you want insights like we just given every single day, the link to the Discord community where we do this day in, day out is in the description down below. Hope you enjoyed it. I hope you're gonna have a wonderful week in front of you. Stay safe, and I'm gonna see you next time. Bye.